Have you ever noticed how some people seem to effortlessly grow their wealth while others struggle just to save a few $100s a year? The secret isn't in how much you earn, it's in how you manage and invest your money. Today, we're going to explore the safest ways to make your money grow in the United States, strategies that even people earning average salaries can use to achieve financial freedom over time without falling into risky schemes or relying on paid apps. Let's start with the most basic method everyone knows: saving money in a bank. Most people think a traditional savings account is enough. It's safe, yes, but the returns are minimal, often less than 1% per year. That means if you deposit $10,000 today, after a year you'll have less than $10,100, barely keeping up with inflation. Inflation in the U.S. averages around 2 to 3% annually, meaning that in reality, your money may lose value over time. But there's a smarter way: high-yield savings accounts. These accounts can currently offer 3% to 5% per year, allowing your money to grow faster than inflation, while remaining fully insured up to $250,000. Even a modest $5,000 investment could grow to over $5,200 in just 1 year, safely. Now, let's move to a slightly more advanced but still extremely safe method: certificates of deposit, or CDs. With CDs, you commit your money for a fixed period, anywhere from 6 months to 5 years. In return, you receive guaranteed interest, often between 4% and 5.5% annually. A $20,000 investment at 5% for 5 years could grow to nearly $25,500 without any risk to your initial capital. Longer-term CDs often pay higher rates, giving disciplined savers the opportunity to maximize their returns without stepping into risky territory. For those willing to plan long-term, index funds and ETFs are an incredibly effective option. These funds track the overall market, such as a broad index of hundreds of large companies. Historically, these investments have yielded 7% to 10% per year on average. That might not sound like much at first, but the power of compounding turns even modest investments into substantial sums. For example, if you invest $1,000 per month into a fund averaging 8% annual growth, after 20 years, your portfolio could be worth over $600,000. After 30 years, that number can easily surpass $1 million, all without picking a single individual stock. Compound interest is one of the most powerful financial forces you can leverage. Think of it as a snowball rolling down a hill, gradually growing larger and faster. Even small amounts invested consistently can result in remarkable growth over decades. To illustrate, if you start with $500 today and add just $200 per month at a 7% annual return, in 10 years, you'll have around $40,000. In 20 years, that grows to nearly $130,000. And in 30 years, over $300,000. The earlier you start, the more dramatic the results. But investing safely isn't just about picking the right accounts or funds. It's also about avoiding common mistakes. Overspending, mismanaging credit cards, chasing get-rich-quick schemes, and failing to diversify are traps that can erode your wealth before it even has a chance to grow. Diversification is essential. Don't put all your money into a single investment or keep all your savings in one place. By spreading your money across different types of accounts, investments, and strategies, you reduce risk and protect your long-term growth. There are also several habits that can accelerate your financial success. Reinvesting dividends, maintaining an emergency fund, and reviewing your portfolio regularly can make a substantial difference. For example, reinvesting dividends on a $50,000 investment earning 4% annually could add an extra $10,000 over 10 years purely from compounding. Small, consistent actions like this multiply over time, turning ordinary savings into extraordinary wealth. It's also fascinating to note how behavior influences outcomes. Studies show that people who check their investments too frequently tend to make impulsive decisions, which can hurt returns. On the other hand, those who adopt a disciplined long-term approach, investing regularly, staying diversified, and letting their money grow, consistently outperform the majority. Even minor adjustments like setting up automatic monthly investments or reviewing your portfolio quarterly instead of daily can have a massive impact over decades. By combining safe accounts, CDS, index funds, and the power of compound interest, anyone can create a financial plan that steadily grows wealth. Imagine starting with just $10,000, adding $500 every month, and letting the money grow at 6 to 7% per year. In 20 years, that could grow to over $300,000, and in 30 years, it could surpass $700,000. These aren't theoretical numbers. They reflect real historical performance of low-risk investment strategies in the U.S. market. Ultimately, financial success isn't about luck. It's about knowledge, consistency, and smart choices. Start early, avoid mistakes, diversify, and let the power of compound interest work for you. The sooner you begin, the sooner your money starts growing for you, instead of you working endlessly for it. Every small step you take today builds the foundation for a secure and prosperous financial future. Your financial freedom is within reach. By understanding these strategies, acting consistently, and being patient, you can turn modest savings into substantial wealth over time. Start today, stay disciplined, and watch how even small, steady investments transform into life-changing results over the years.